Hey, what is going on? Welcome back to the channel. Today we're taking a look at Orion Protocol, and I do want to say that I'm not a financial advisor. You should do your own research before investing money into crypto. Also, giving a shout out to the Telegram chat. Make sure to check it out. We're sharing great low cap gems, sharing great news, sharing tips for newcomers, a lot of great investors and smart people in general in that chat. I'm really proud of it and what it has become. So we are on the weekly chart for Orion Protocol. As you can see, we are under the 20 EMA, and as I have been saying time and time again, if you are under the 20 EMA, you are in a downtrend. If you are above it, you are in an uptrend. So right now we are in uptrend. We are getting suppressed by the daily 20 EMA as well, but this is on the weekly. I do want to show you the relative strength index at the moment. You can see that we're making a series of lower lows and lower highs, which is an indicator of a downtrend. So no question about it, we are in a downtrend in a sort of a bear market for Orion Protocol over here. So hopefully we're going to find the bottom very soon. Bitcoin is pumping. It's not very often that am recording a video and we are actually pumping on the prices. So we are actually doing that. And let's jump into the daily chart. Bitcoin sitting at $33.5 thousand at the moment. Okay, now on the daily, as you can see, we're constantly getting suppressed down by this 20 EMA, and we want to get up above it. We keep hitting our head and it keeps hitting us back down. And as you can see here, we broke out for a couple of days, but then we went back down. That was when we had the pump with news. I don't remember exactly what was announced at that time, but I do remember it was some sort of news. But with that being said, let me turn back on all the drawings, and all of a sudden it looks a bit messy. I know, I do apologize, but hopefully it's not going to be too hard. We do find ourselves in a very bullish pattern at the moment for Orion Protocol. As you can see, we are in a falling wedge. As you can see, I have drawn the wedge over here, and we have been hitting it as support. We have this trend line, and as resistance, we have this upper trend line. And right now, it seems like we are breaking out of it, which is incredibly good. It is good for the price, obviously. I am involved with Orion Protocol. Everyone, pretty much everyone in the Telegram chat is involved with Orion Protocol. So we are biased towards the project, obviously, but it is a very good project. I do believe in it long term, and I am planning on making a video on why you should be bullish and why you should be keeping an eye out for Orion Protocol, because it is one of the best, if not the best, decentralized exchange. All right, so as you can see, we're starting to break out, and the breakout target from this falling wedge, and a falling wedge, I will remind you, is a bullish pattern. A rising wedge is a bearish pattern. So the target out of this pattern is where we initially created the wedge, and this is right here. As you can see, once we have created support and once we created the resistance, that is where you consider the target. That is when you consider the wedge being fully made, and that is your target. So that is sitting right at $5.90, and $5.90 is where we have this strong red area of resistance all the way up to $6.13, because that's where we are usually wicking on the daily chart. So keep that in mind. Obviously, look for the 20 EMA as strong resistance. This pattern will take time to play out. Obviously, it's not going to play out in a day or two. It might take a couple of weeks, but eventually we're going to break out of this pattern and we're going to head to this target of $5.90. Sometimes you end up dropping down from a bullish pattern like this, from a falling wedge, but 68% of the time I think it's 68% of the time, do correct me in the comments below if I'm mistaken, but 68% of the time you do end up going up and breaking to the upside. And right now, the main resistance levels that I have drawn out for you is obviously the 20 EMA over here, which is sitting at $4.70 pretty much. Then we have a nice resistance at $4.90 and $5.30. These are some of the major key resistance areas that I have drawn out for you guys, so keep an eye out for them, because you might want to sell at one of these resistance levels and just buy back in at the support zone once we do have a correction. So if we take a look at some of the indicators on the daily chart, as you can see, we're making this V-shaped recovery, and right now we're sitting at index of 39, so pretty low. I do apologize about that. So we're sitting pretty low on the relative strength index, so there is a lot more upside potential. On the MACD, we have just formed the bullish cross under the histogram, which is one of the most bullish indicators in all of the indicators pretty much. And the MACD is a lagging indicator, which I keep on reminding you of. What that means is it basically means that once a move has been made on the price chart, it will later on be confirmed by the MACD. So we are starting this uptrend. The uptrend has been going on for 3 days, I would say, and we have created the bullish cross just yesterday. So that's how you know it's a lagging indicator. If we go to the Stochastic Rsi, as you can see, we still haven't reached this top, and usually you just move in waves on the Stochastic Rsi, but as you can see, if I draw this resistance trend line over here, as you can see, we are getting resisted. We're getting some resistance on this level over here. So we might just end up hitting our head on this level and then dropping back down. So keep that in mind. Draw this out on your charts. That will help you better understand. But right now we opened up a new candle on the daily chart. As you can see, it's 3 a.m. where I'm at, and we open up a new candle at 3 a.m. over here. So there we go. We are out of this pattern on with this candle. Hopefully we're gonna hit our head on the 20 EMA, then retest it and just break it as resistance and retest it as support. Hopefully that can happen in the next couple of days. But yeah, that's pretty much it for the daily chart. Let's jump into the 4 hour. Actually, no. I do want to go into the 3-day chart because I did find something bullish on there, and I'm going to let you know what that is in a moment. So we are on the 3-day chart right now, and we have created the bullish cross under the histogram here as well, which is great. And if we go and take a look at the Stochastic RSI, as you can see, we're pretty much in the bottom right now. We're in the ground, in the floor, and there is the only way out of here is to the upside. So that is very bullish. So if we started going back down and Bitcoin has a correction, because we are getting a bit overextended on the market right now, just getting pumped up. I really don't know why it's happening right now. Maybe we got some bullish news. I don't know. Just came back from work and just wanted to get this video out for you. Just going to do some research afterwards. But if we do end up coming back down, then I do have this nice support level over here, and that it would be somewhere around $4, 5 to 10 cents. So that would be your next support area. If it dips anywhere below that, then that is a buying zone for sure, all the way to $3.50. So if it dips any lower, if Bitcoin comes back down to 26K, which we are anticipating, if it doesn't happen, great. But if it does, I will not be surprised because we potentially may be following the Wyckoff pattern. But on the 3-day chart, as you can see, the 20 EMA is coming back down to this red resistance zone that I have pointed out for you. That is from $5.90 all the way to $6.13. So that is going to be a major resistance zone. Hopefully we don't create a double top over there and break down, but we'll see how it goes. So let's just jump into the 4-hourly chart at the minute. So on the 4-hourly chart, we are being squeezed into a move over here, as you can see. So we're forming a sort of a bull flag over here, and this is a very bullish pattern. So if I'm just gonna draw this out for you like this, as you can see, that is the pole, kind of. That is going to be the flag, as you can see. But we did start breaking down from it on the 4-hourly chart, but we have come back into it, so we still might it still might play out, because a lot of the time I do notice patterns being invalidated, but the price ends up coming back down into the pattern, and the targets are being met afterwards. So you just take the pole, which is exactly the candle that you have over here, and you just bring it out to wherever it is going to break out from this resistance zone. So wherever we start breaking out, that is how you measure the breakout target. For example, if we started breaking out somewhere over here, then that would be a target of $4.75. And I believe that is where the daily 20 EMA is. I will double check right now. Yep, exactly. That is where the 20 daily EMA is. So we're looking quite bullish. Like I said, if we do end up dropping $4, 5 or 10 cents, that might be your great area. That is your great area to buy back in. But right now, let's go back to the 4 hourly chart and let's check some key indicators over here. As you can see, we are being suppressed down by this trend line on the 4 hourly chart. As you can see, we're making lower lows over here and lower highs. So hopefully we end up breaking this resistance over here and retesting it at support and then coming back up, getting overextended and then having a correction. So that is what I'm expecting. If the market keeps up this bullishness, that would be great. Obviously, we have created the bullish cross on the 4 hourly. That was on July 20th. So that was your first indicator that we are in this sort of an uptrend. And if we go into the stochastic RSI, that is where we started. That is where we are starting to get near the bottom. So yeah, that just means that we might be bearish on the 4 hourly chart just for a couple of more candles. But overall, we're looking very bullish. We're in this bull flag. It is looking very, very good right now. We're being suppressed down by the 55 EMA. So if you're in between the 20 and the 55 EMA, you're consolidating. But as you can see, the EMAs are squeezing together and they're forcing the price. They're going to force the price into a breakout, whether to the upside or to the downside. But a move is coming, guys. So do expect that. And like I said, we are overall in a very bullish pattern on the daily. We are in this falling wedge. So make sure to keep that in mind. And for some reason, the wedge just disappeared on me. Do apologize about that. So there we go. That would be our wedge. So yeah, that's pretty much it, guys. Long-term target for the next couple of weeks would be $5.90. We might get there tomorrow. We might get there in a couple of days. Nobody knows, guys, but that is the target out of this pattern. Keep that in mind. But overall, dollar cost averaging is your best friend right now. And yeah, that's pretty much it, guys. Thank you for all the support. Thanks for liking, commenting, and subscribing to the channel. Make sure to hit the bell notification button to be notified whenever I make any updates such as these. I'm going to catch you in the next video. Goodbye and good night.